Hi there, I'm Matt Ishbia, President and CEO of UWM, and this is the Weekly Fast Break. Actually, this is a special edition of the Weekly Fast Break where I want to talk about the market, pricing, early payoffs, the whole thing that everyone wants to know about right now. So, from UWM's perspective, let me just start with this. This has never been seen in our industry before. 20, 30, 50, the 10-year Treasury is lower than it's ever been. The dislocation of the market has never been seen. It's unprecedented times. So let's start with that. And now there's good things about that, which we're going to talk about, but I want you to understand unprecedented times. Now, on top of that, what is going to happen? Who knows what's going to happen? And all things. First, I want to talk about pricing. Pricing is a big thing. Everyone wants to say, hey, why aren't rates lower? Rates should be lower because the 10-year Treasury keeps dropping. Well, listen, for the history of mortgage, how we've always followed is the 10-year Treasury and mortgage-backed securities usually follow each other. Well, right now they've decoupled. The 10-year keeps dropping and mortgage-backed securities go up, which is what our pricing is based off, MBS. Now, also the reverse is happening. 10-year Treasury goes up, MBS goes down. It's not logical to what we've always known. Now, MBS is what you should be looking at for pricing, but there's all those three other components that tie into your pricing and understanding why mortgage rates are not as low as we all thought or would hope they would be based on the 10-year Treasury. On top of mortgage-backed securities, it's also servicing values. What's the value of that servicing for that borrower? How many years are they going to pay? Nobody knows. Nobody knows what's happening in the market. It's like uncertainty creates fear, and fear creates people saying, I'm not sure what's going to happen. And so servicing values plus MBS is the price you usually see. Now, servicing values are diminished much more than we expected, and now MBS are not following 10 years, so pricing has not gotten as good across the industry as everyone in the industry would love to see. On top of that, hedge costs. Hedge costs is the third part of it. Hedge costs go up and down based on volatility. Volatility is crazy right now, so hedge costs are more. It's more expensive to hedge the pipeline than ever before. And so with that being said, people have more hedge costs, which means a worse price because more hedge costs, worse servicing values, and the mortgage-backed securities are not where they should be. On top of that, the last piece is margin. How much margin are lenders putting in there? Now at UWM, we have not had to add a lot of margin for operational capacity like our competitors. We're still on 2 to 3 days on new loans, 1 to 2 days on conditions. So that's not as big of a part of it. It's the other three factors. And so what does this mean going forward? Here's what I think. The next 2 to 7 business days, hopefully the markets will calm down and settle in where it's at. When what you'll see is hopefully the 10-year Treasury, maybe it stays the same, but MBS pricing, mortgage-backed securities, will go lower, which means better pricing for you. Servicing values will then stabilize and maybe they'll go up a little bit and hedge costs will go down. With all three of those things, rates will get better for consumers and for you on the rate sheet every single day, not just from UWM, but across the country. That's what we see happening. Now, could it take 20 days for it to stabilize? It could. We don't know. We're all monitoring it very closely, and we've never seen this in the history. So uncertainty creates fear, creates volatility. All these things are happening, and that's what's going on with pricing and the market. Never been done before, never been seen, but it's a big deal, and I want you guys to understand, because consumers think, hey, Fed dropped rates by 50 basis points. Give me my lower rate. We all know that doesn't actually work that way, and I want you to understand, just because the 10-year Treasury drops doesn't mean MBS follows it. Doesn't mean that rates automatically get better, at least today in this crazy market that we're in. Now, the other